now to take a look at the latest in the world of business. Later on, we'll be telling you countries like Uganda and Rwanda have also gone ahead to ban the 7 peanut butters that were banned here in the country. We'll be giving you details of that later on this broadcast, but first, we'll take a look at the highlights. Now, Equity 9 months profits at 10% to 17 billion shillings. Uganda and Rwanda suspends imports of 7 Kenyan peanut butter brands. Stockbrokers warn of mass NSE forced buyouts delistings. Now we take a look at the top story of the day, and we start off with the results, Q3 results for Equity Bank, where it has today revealed its earnings for Q3, showing that the lender continues to enjoy higher returns from the credit market, where the bank has further broadened its loan. This coming in the backdrop of cries from other lenders that led to the repeal of the interest rate cap. However, according to the Equity Bank CEO James Mwangi, the removal of the rate cap and the debate is dead on arrival, citing that the bank, even with the cap in place, continued to issue credit to the real economy. Equity Bank's 9 months net profit increased 10.3% to 17.46 billion shillings on increased lending and fees on transactions. Let's take a look.
Well, indeed, thank you very much, and a very good afternoon to you too, Carrie. Yes, we're currently at the Equity Center, that is the headquarters of Equity Bank Kenya, and as well as the Equity Bank Group. And what we were receiving here today was the Q3 results, just showing that the bank has yet again seen a lot of improvements. When you look at the profit before tax, for instance, it went up by about 11% from 22.41 to about 24 billion. And when you look at the net interest income, it also went up, recorded an increase of about 11%. When you look at the total income, also went up by about 11% as well, just showing the growth rate at which the bank has been growing. And also when you look at the bank's balance sheet, it has recorded yet another increase. And remember, one of the things that Equity Bank CEO, that is Dr. James Mwangi, has mentioned is the fact that the bank will continue to focus on MSMEs. These are the sectors that lead in terms of growth, in terms of employment, and this is the biggest contributor to the country's GDP. And he says going forward, the bank will continue to focus on these areas in terms of issuing credit to them. And with the removal of the interest rate cap, the bank will continue to issue credit and to ensure that these sectors of the economy have enough liquidity to move on with their businesses.
When you look at agriculture, we started dealing with the peasants and turning them into agribusinesses. Look at the newfound focus in the medium-sized farms. Why? Because we are reorganizing, and we want to create an outgrowers model where we support the large and medium-scale farmer, and that farmer become the aggregator of all the peasants farmers or the agribusinesses within their region. So reorganize the entire agricultural ecosystem in the country in value chains using the small and medium enterprise. I must say this, we've really been supported by Labo Bank, the world's largest bank. It's helping us to, Esther, where are you? Esther is our Associate Director for Agriculture, and Labo Bank has seconded an expert. Is he in the room? It is revealed, again, to ensure that we're able to reorganize the entire agricultural sector in the country. And that is really that's the equilibrium we don't want. If you are in the SMEs and agriculture, then you don't want to, and we can see 45,000 micro, small, and medium enterprises being taken on.
Well, we'll be giving you more details of what the outcome was of that event and also what his say was rather on the removal of the interest rate cap. Now we move on to other stories where stockbrokers and investment banks have warned of mass takeovers and delisting from the Nairobi Securities Exchange following the coming into force of a new law lowering the threshold of a forcible buyout of minority shareholders. The Statute Law Miscellaneous Amendments Act number 12 of 2019, which took effect in July, allows shareholders with a 50% stake to make compulsory acquisitions of shares held by the remaining investors. This is lower than the previous threshold of 90% that had protected the interests of minority shareholders. The Kenya Association of Stockbrokers and Investment Banks, KASIB, says the revised threshold is too low and will make it easier for majority shareholders to forcibly eject the minorities. Now, Kenya Power has rolled out a campaign aimed at increasing customer satisfaction and enhancing the company's revenue protections initiatives. The campaign will commence in Nairobi County, targeting approximately 2 million meters. The similar campaigns will be rolled out to cover the rest of the country at a later date. Linda Koskei tells us more.
The campaign, dubbed Know Your Meter, will entail checking premises to establish whether they are connected to electricity, if there is a meter, and if the meter is properly connected and functional. It also seeks to identify and weed out illegal connections, as well as resolve customer concerns. The campaign will be implemented by Kenya Power staff drawn from all divisions, where each member of staff will be dressed in branded jacket with visible job identification cards. The campaign will commence in Nairobi County, targeting approximately 2 million meters. Similar campaigns will be rolled out to cover the rest of the country at a later date. Linda Koskei, K24 Business.
Now, today's discussion will involve the rollout of the EGMS, which is the Excise Goods Management System, which is expected to go live tomorrow. We'll be having that discussion later on with Caxton Masudi, who is the KRA Deputy Commissioner for Policy and Tax Administration. But before we go to him, let's just first of all take a look at maybe what to expect at once the rollout of this EGMS goes live tomorrow. Now, KRA will implement the Excise Good Management System on also bottled water, soda, energy drinks, and other non-alcoholic beverages. Now, the cost of terms was revealed down. This is as a result of conversations they have been having with manufacturers from 1.5 shillings and to 0.5 shillings per stamp for bottled water. Now, if we look at other areas and we get to see what will be happening also to see if the issues surrounding this EGMS will be rolled out. My graphics seems to have just gone down, but we'll be looking at that later on. But we'll now head to Caxton, who is going to tell us more about the rollout of this EGMS, and we get to see how they're going to implement this and how you as a consumer are going to be affected with the rollout of this excise stamp duty. Welcome to our studios, first of all.
Thank you.
Well, maybe we can start from how do you plan to roll out? I know it's going to go live tomorrow. You will tell us details about that, but I would like to know how do you plan to roll it out? And I also mentioned to us the number of drinks that will be affected.
Yes, I think first it is important that we inform the public about what EGMS is. EGMS is a system used by government to monitor and control production of accessible goods, and it applies to all accessible goods imported or manufactured within the country. So first and foremost, let me say that we are set to go. We are ready. All the equipment and the factories have been installed. The stamps required for this process have been delivered to the manufacturers, and our teams are outside there providing support to all the manufacturers and importers to ensure that they get it right before midnight tonight.
Okay.
So we are ready. We have talked to the industry, we have had extensive consultations, and we are satisfied that all is well.
Okay. How will this enable, before we even go there, let's just know what time do you plan to roll out this? You've said by midnight tonight.
Yes.
Midnight today. So does that mean tomorrow? By tomorrow morning?
That is by tomorrow morning we should have products rolling out of the system with stamps.
Okay.
Yes.
How will this enable fair competition amongst the traders? We know manufacturers have been opposed to the rollout of this EGMS because they're saying it's going to raise the operational cost, which they'll be now forced to pass on to the consumer, meaning the cost of bottled water, soda, juices, and the rest will go up.
First and foremost, it is important to appreciate that this is a system that is both good for both government and for the private sector. Because as you appreciate, the biggest problem this country has been having is issues to deal with illicit trade, especially counterfeit goods, where people put into the market goods that have not paid taxes or have not conformed with other government regulatory requirements. So the end result is that they put the product in the market at a cheaper price as compared to those who comply, and therefore putting them at a disadvantage. Now, what this system does is that from tomorrow, if a product has not conformed with the requirements of government, then it will not be in the market. So this is basically the reason. It is going to be good for those who have been paying taxes. For those who have not been paying taxes, this is a call to them to now comply, because if they don't, then action will be taken against them.
Okay. As a result of maybe the rollout, I'd like to know, Ali Oni did mention that you have talked to manufacturers and you have given this excise stamps duty to them. I'd like to know the number of manufacturers that you have engaged in this whole rollout, and also there are statistics showing that 366 companies are actually that are for water, juices, and non-alcoholic are expected to close down since they have not conformed to some of the various measures that you've taken.
Yeah, as it stands now, this rollout, which is an extension of what we've been having, because we started this program in 2013 on wine, spirits, and tobacco. We are now rolling out to non-alcoholic beverages. The number of companies to be affected by this phase is about 450 manufacturers and importers. And as it stands now, no company who has come forward to be assisted to comply hasn't complied. So I don't think there will be any major problems for anyone.
Okay, maybe if you can elaborate for us in terms of the cost of the excise duty stamp, how much are you selling it at to the manufacturers, and also would like to know a little bit about the price. How have you agreed with the manufacturers in terms of passing that cost to the consumers?
We don't think it is going to have a major impact on consumers, because the price that is applicable to these products is 0.6 shillings. For sodas and other non-alcoholic beverages, and 0.5 shillings for water, bottled water. So this cost was actually determined after appeals from the industry that requested that the previous amounts that were being charged were too exorbitant for the industry. So the government reduced the cost from 1.5 shillings to 0.5 for water and 0.6 for other non-alcoholic beverages. So we are satisfied that following that engagement and intervention from government, the current prices of the stamps are not so significant to affect the cost of those products.
But how much are you looking at raising?
For this phase, we are expecting to raise annually 4 billion shillings. That is the expectation from all the products. The additional revenue that we are expecting is above 4 billion. Okay.
And another reason maybe why you have rolled out just for the spirits and also the alcoholic drinks is maybe to fight illicit trade. And we have seen the war on illicit trade, actually, when it comes to that sector, actually, you guys are actually winning. Do you see the same thing happening in the rollout of this?
Yes. The lessons we learned from the previous rollout of this system to alcohol and tobacco is that it effectively phases out any importer or manufacturer who is not willing to comply with government requirements. For example, during the rollout of alcohol, we managed to phase out illegal production from 177 companies to about only 21. So all the others were surviving in the market virtually by evading taxes.
Okay.
So, so we are optimistic that those who do not comply, yes, will be affected, but we are assisting all of them to comply because we really don't want anyone to fall out. So we are teaching them about the laws, taxation, how to comply, and we are really facilitating them with installation so that they do not at any one time fall out.
Okay.
Because we want all of them to survive.
Okay, thank you so much. I wish you could go along with this conversation, but then again, time is not on our side, but thank you for coming to our studios. That has been Caxton Masudi, who is the KRA Deputy Commissioner for Policy and Tax, and we'll invite him again. I know this is a topic that touches most of you, and now we can have him later on this broadcast. We now take a look at how the shares have been trading at the NSE market, and also later on we'll get to see how the foreign exchange market has been. We first take a look at the top gainers, and we see the Standard Group market share price was 29 shillings and 20 cents. That was up 9.98% change. Eveready market share price was 1 shillings and 11 cents, up 7.7% change. TPS Eastern Africa market share price was 17 shillings and 30 cents, up 4.85% change. Now, top losers, we see Kakuzi. Our market share price was 360 shillings. That is negative 10% change. Samia Africa, 3 shillings and 46 cents. That is negative 8.47% change. CFC, our market share price was 102 shillings. That is a market share price, and that is a negative 7.27% change. We now look at how the shilling has been trading against other major currencies, as well as the sterling pound, as also other major currencies. We get to see how the US dollar and also various shillings have been trading, and we get to see 102 for the US dollar has been buying at 102.531 and selling at 102.51. Sterling pound has been trading at 131.73 and selling at 132.02. You can also see the rest of the currencies there that's been trading against other major currencies, and we can see the Ugandan one has been trading against the Kenyan currency at 36.16 and selling at 36.33. That's how the foreign exchange has been. My name is Carol Jenga. Have a great afternoon. You have been watching Inside Business. Up next is News Currents.